Good morning, my name is Simon Groom and I'm Director of Exam Training and Practical Guidance here at Tolley. One of the products that we have at Tolley is TolleyGuidance, which not only tells you what the legislation and the rules say, but also what they mean to you and what you need to do with them. It's a very, very practical product. And what we're doing here today is we're going to talk about the Ghelanis case. And with me I've got Ravi Hindocha, who works on the corporate tax module of TolleyGuidance. Welcome, Ravi.
Hi Simon, thank you.
So first of all, Ravi, which clients is this going to apply to?
Sure, so the case is potentially very wide in its scope. It can apply to companies of any size, but typically it's going to affect small and medium-sized owner-managed companies. Okay,
so tell me a little bit about the case itself then.
Sure, so the case concerns the associated companies rules, as you mentioned. And in this case, there were two companies that were owned by the same groups of shareholders, albeit the shareholdings were in different proportions in each company. Ghelanis filed a tax return on the basis that it had no associated companies. HMRC thought otherwise, thought that it was associated with another company that was owned by the same shareholders, again, as I say, albeit in different proportions.
Okay, so it's this point about we've got the same group of people, i.e. perhaps family members, who own two companies, and it's this point around control, isn't it? And I know that it's quite complex, and the news item that you've written sort of talks a little bit more about that, but it is this two groups of shareholders, isn't it?
That's exactly right, and as you say, in this case it related to family. The shareholders were the family members, but their shareholdings in each of these two companies was just slightly different, and it was whether those two companies were associated or not. Right.
But I mean, the associated companies rules have been around for a long time. I mean, surely we know how they work.
Yes, they have been around for a long time, but they are very complex, can be quite tricky to apply, as most practitioners will tell you. Right. In fact, they arise so often that there can be a tendency almost to assume compliance with them. And this case just illustrates how important it is to ensure that you are compliant with those rules.
Okay, but I mean, I suppose at the end of the day, and I don't want to put a dampener on your news item and that sort of thing, but the rates of tax are converging. You know, the small companies rate and the full rate are converging. So the problem may not go away, but it's certainly going to be less important. So why is this critical here?
Sure, well, you're absolutely right. The rates are converging from the 1st of April 2015. Of course, though, the CTSA rules are backward looking. Right. And so whilst the rules might converge in 2015, it's going to be long after 2015 that people are going to be filing tax returns where they're still applying sort of different rates.
Right. And you've got the inquiry window, I suppose, open for a while, so we've still got a number of years yet, haven't we?
Exactly. Yeah, that's right.
Okay. So I mean, it sounds as though you know, it's one of those things that you say that people almost take for granted, that you know, they assume they know the rules, but it sounds a little bit as though it's quite tricky on this one. I mean, HMRC's guidance, I understand, was sort of questioned in this case.
That's right, yeah. The case effectively hinged on this piece of HMRC's guidance. It can be found in their manuals. Ghelanis' interpretation of that guidance was that these two companies were not associated. HMRC's was, of course, that they were associated. Ghelanis appealed, and therefore the case went to the first-tier tribunal. The court found in favour of HMRC, though interestingly, in its judgment, the court did say that HMRC's guidance only served to confuse matters. It wasn't very clear on the rules. In fact, HMRC hasn't as yet updated its guidance for this case, so anyone referring to it could still be caught out. That's why we'd recommend, if you are interested in this case, or if you feel that you might be affected, probably be worthwhile having a look at our news item, which will give you really detailed information on the case and what you need to know.
Yeah. Okay. Well, I think that's enough. I think you've told us enough about why this is going to be relevant, and it sounds as though it could potentially be relevant to a large number of clients of sort of small practitioners. So it's something that we need to watch out for. So thank you very much for that.
Thank you.
If you want to find out more details about the case, then as Ravi says, you can download the news item that we're talking about. If you click on the link at the end of this video and complete the form, we'll send you out a copy of the news item so you can get more details on this. I'm sure you'll agree that it's potentially a very important case and could affect a number of your clients, so it's something that's well worth having a look at. I hope you found this useful, and so thank you very much for watching.